We are ready to continue. It's Hamburg Mobile Summit Live, and we are going to speak about games. One of the reasons I love this industry so much is that there are so much magic in it, and unicorns, of course. So the next panel is going to be about M&A and unicorns in this field. Let me introduce our speakers. And we are ready to welcome them. David, hello.
Hello, Julia, how are you?
I'm good. We also have Timo, John, and Tobias. Guys, we are ready for you, and we are going to learn a lot, I hope.
Great. Thanks, Julia. Good morning, everyone that's tuning in. We've got a really exciting panel for you to talk about. A slightly different aspect of the industry is all of the fascinating M&A that's been happening for a variety of reasons. That we've got a stellar lineup of people that are going to approach us from different angles. So before we start, I'll just hand over to you guys just to briefly introduce yourself so that everyone understands how you're approaching this panel. Who wants to go first?
I can start. So my name is David. I run the European office for Gamevil. Come to us, two Korean mobile games publishers and developers. Gamevil acquired Come to Us quite a few years ago, about 1 year before Come to Us released Summoner's War. So I hope I have a good spot here in the M&A panel, because we're essentially a product of a very successful acquisition. And Come to Us is also relatively active in investing, especially in Korea, but also internationally. And they invested about 120 million just this year in various companies.
So maybe I continue. I'm Tobias. I'm founder and managing director of Bytro Labs in Hamburg. We are a studio of 50 employees at the moment, and have grown first organically and then as part of Stillfront Group over the last 10 years. We had this M&A ourselves, so we were acquired by the Stillfront Group when they were just starting to become one of the big aggregators, as they are sometimes called, and now it's a main market stock listed unicorn, which has grown dramatically over the last years.
Great. Timo?
Yeah. Yes. So, hi everyone, my name is Timo. I'm heading corporate strategy and planning at Rovio, also responsible for evaluating M&A and other big investment opportunities. Used to also be responsible for our M&A pipeline earlier. I've been in the Rovio for 8 years. We have done a couple of acquisitions. They've been involved in all of those. Before that, did some business type of things like consulting, banking stuff. But don't worry, I've been a gamer for nearly 30 years. Used to play a lot of Empires and Puzzles, even in a top 20 clan, but that was a very intense. So I have to stop that, and I've been playing more about like a bit more casual way, like Rovio's Dark War Heroes, Call of Duty. But I have to say, in recent days, I've been watching Euro 2020 and especially Finnish national team. So first time ever we're playing in a final tournament. So it's pretty special.
Amazing. I'm surprised there isn't some token Angry Bird. I'm not used to being on a panel with someone from Rovio and there's not some like homage to Angry Birds hidden in the background. But great. Well, look, good to have you all here. I'm John from Boombit. We're a mobile games developer and publisher listed on the Polish Stock Exchange. Got great titles, everything from like Hunt Royale, if you like your battle royale, Minecraft type games, do lovely sort of PvP mid-core games. We've got some lovely idle titles out, hyper casual games, and we've just made our first venture into Nintendo Switch as well. And yeah, from the M&A side, we're pretty active in terms of investing in studios, but we'll get into how each of us does that in a bit more detail, because that's, for me, is fascinating. We all have the same goal, but the way we approach it is really different. Okay, so let's start. So the first obvious question is, what do we all think is driving this current M&A boom in gaming? Because I kind of feel like every day I log in and check the news or check deconstructor of funds, someone else has been bought. So what's happening?
I think there's just a lot of money going around. If you look at it, all the big gaming companies and everybody who is making acquisitions, they have been making very good profits even pre-pandemic. And then last year, of course, everything has accelerated, and almost all the digital companies, to say like Cast Whitenet, have just made a lot of profit, and that has to go somewhere. And at the same time, everybody has been talking about consolidation in the game space and the user acquisition space and everything for a long time. So I guess 2020 and 21 is when it's finally happening.
Yeah, I agree that like it's been in talks for years, and we have to admit that mobile gaming is starting to mature the industry, like some other industries, and it's very common to see that the consolidation is happening, and the market it's still growing a lot. So don't get me wrong, it's still very attractive business. But then if you think about how difficult it is actually grow in this business, if you think about how difficult it is reach like top grossing charts, so M&A has been a way, especially if you look at publicly listed companies like Zynga or Stillfront, that's been the main vehicle for growth. So that's definitely like a driving. So there is some sort of market pressure also from the investor community, and that's definitely driving the M&A boom in the market. And then I think recently we have also witnessed some other like a non-gaming companies enter into this M&A boom. So I'm basically talking about like private equity companies. There's lots of money there, and because if they see some big opportunity somewhere to make money, of course they will pour the money there. So we have seen, for example, this year Carlyle Group acquired Jagex in January, and earlier Goldman Sachs, private equity firm, acquired a big stake in Voodoo, and this is just expected to continue. So there's also like a new players entering the competition.
Yeah, you could say it's now common knowledge for investors that gaming is actually a market where you can make money. And I think that was a story that we had to like really get into the markets over the last 10 years. And of course, everyone I think also realized that games are risky, but you can mitigate this risk by just becoming bigger, and that you never know if the next product will work. So acquiring proven studios, proven products with a very long tail is something that investors really like, and will give a good evaluation once they realize that the game that is successful today will also be there in 5 years and still produce creating profits. And there seems to be a lot of competition now, like between like everyone realized, okay, now it's on now, and also prices for M&A have as I perceived it, like I'm not really on this side and in Stillfront, but just looking at the market, it seems that prices for acquisitions have really risen over the last year, and maybe even tended to become a kind of over-evaluation of some studios, as I would see it, when you look at it from the sober investment perspective.
Yeah, I think they're all great points. I think that's one of the things that's been driving all these huge funds that the gaming VCs have raised, is because like you said, there's even more interest from the existing gaming investors, but you know, a lot of funds now that have been hit quite badly given what's happening in the world in other verticals are now, exactly as you say, are now realize how attractive gaming is and now entering the market. And I think when you combine all of that together, plus the number of, you know, developers and publishers that are also going public with that capital, it definitely is. And I honestly can't think of a better environment to be a studio now looking for an exit, to your point, in terms of valuations, because you know, the number and speed of conversations you're having is unbelievable. So let's imagine we are in this scenario where we've now got this fund or this very large checkbook to start investing in the gaming arena. What do you think are the hot areas to invest in? And you know, this doesn't happen to be living to content studios. It could be platforms, marketplaces, tools, tech. Where would you look?
I think that really depends on what kind of company you are and what your goal is, right? I think it definitely is a good time to be a seller, no matter what you are selling right now, because you have so many options. And if you have something that's really good, then a lot of people will want to, you know, invest in you. I think you can see a lot of the big like entrenched gaming companies like Take-Two, for example, who have been relatively late to the mobile space, they only just recently acquired Nordios, which is not a new mobile gaming company. You know, they've been around for a long time. So they're just, you know, filling up their library with a kind of game that they haven't done previously, but where they think, like also to Tobias' point, that it's going to last a long time, and that's a complementary investment for them. So for us, also as like a games publisher, or for me personally, I think studios that have really, really good games are extremely valuable, because everybody who is big now got big essentially for one or two products. And then everybody else that everything else we're trying is not necessarily seeing the same success. So it might well be better to just buy somebody else who is doing really well at something like a different product than just keep trying to build your own teams. And I think that's what Take-Two, for example, is doing. And that's what a lot of other games publishers are doing.
Yeah, exactly. Totally agree with what you said here. And I personally think that the whole gaming market is hot in that sense. As David said, it really depends on what you're looking for, because if you look at what type of deals that we made, mostly of course those are still studio deals, and everyone is still trying to look for the new way to grow. So basically experienced team, innovative game, but then of course you still need to have those KPIs. So everyone is looking for what would be the next game to reach and sustain, even like a top 10 crossing chart. And that's very, very, very difficult to do if you're like a established player, like we can see that on ourselves. So if of course you're looking for like a new ways to do that. And but then I think, like if I look at the market now, we can see that there are also some like future trends coming that is also like attracting especially VC money. Like if you think about how the platforms are developing, especially cross-platform, everyone knows that that's already here, even though maybe we haven't seen that like a purely native games yet there, but everyone has seen how popular, for example, Fortnite has been, and everyone is trying to find a new type of gaming in that area. So cross-platform gaming, cloud gaming, that's still popular. And then I don't know, sometimes it feels like if you have a word called metaverse in your pitch deck, you can just raise money. But so everyone is trying to find out what could be the next Roblox in this market. So there's also this type of like a future trends, like a mega trends coming in the maybe in some sort in the soon, or maybe in the mid term. But I think still in the short term, most of the deals is still looking for like a new innovative studios with the experienced teams.
Yeah, I agree with everything that has been said, and just I more have a question than really something where I know something. But it seems that there are also like more strategic invests becoming more important. So companies investing, for example, in edtech, right? That is something that we've seen now this year, especially, or edtech companies becoming also more game studios, game producing studios. So I wonder now, with all the potential disruption, we don't know yet, but that is coming with the privacy updates in iOS, and it's becoming harder to do performance marketing as we know it on the big platforms. This could be potentially a new hot topic, that like a studio, maybe a gaming studio, which handles this in a specific way that is innovative and drives growth without depending on the classic channels. But I wouldn't know an example. I would be interesting to know if you know any.
Yeah, I think it's a really great point, and you know, when I look at Stillfront and their strategy, you know, it makes sense to me, right? What they're doing. Whereas when I look at someone like Zynga, it's really interesting, right? If you think the acquisition of Rollic pre iOS 14.5, and a lot of people were saying, well, why have you just invested $200 million in a hyper casual studio? I think it's now becoming clear, now they've made an acquisition in the ad tech space, that clearly what Zynga's, and you know, exactly to David's point, their goal clearly is they want to own and control everything, right? They want their own ad network, they want their own mediation, you know, kind of up next would potentially be their own attribution. So they literally have their own closed wall, right? They can attribute everything. And even yesterday, when I look at Vungle that acquired JetPlay, and I guess some people were like, well, why are Vungle acquiring like an influencer, like performance marketing platform? You know, again, for me, what I think Jeremy's seen there, the CEO, really to your point, Tobias, is that, well, if we are moving into this era where privacy is going to be the hot topic, whether you believe that companies genuinely care about privacy or there is an ulterior motive behind the scenes is a separate panel. But I think what Jeremy's seen there is it's very interesting how you can use social content and influencers to attribute your performance campaigns in a way that you currently can't, maybe through other means. So I think for me, that's, perhaps I mean, it's a very fresh acquisition, but I think one that maybe people should study, and I expect to see more of these social content or social ad tech type acquisitions now within bigger gaming companies. Okay, so we've touched on it already because we've been talking about like how VCs may have changed their strategy, and obviously some of us are in the publishing business. How do we feel that all of this M&A has perhaps changed how now publishers approach their business in terms of deploying capital, and maybe how has it even changed how studios might see relationships with publishers with M&A in mind? Have you got any thoughts on that?
I think like M&A is now like a potential end goal for like both parties here. Like if of course there'll be like different type of ways to do partnering with the gaming companies, but I think like if you think about this from the M&A point of view, M&A is always like, if you're selling your company, that's a big decision. So you really, Tobias can tell more about this, but you really want to make sure that the acquirer is the best possible one for you. So I typically call it like it's like a getting married. You really really want to be sure that you have found the right one. So if you can do some sort of partnership before that, like an engagement period, that would be a good way for both parties to actually test how the collaboration could work, what type of synergies there actually exist. And so if you can do some sort of publishing deal or co-investment deal or even minority investment, but then you would still get some sort of access to all the synergies or the benefits that especially the acquirer can provide, that could be the way to do that. So and we can see from the markets that there are a couple of cases where you have seen this type of approach already happening.
I think if you look at the relationship between a developer and a publisher, there's a very obvious risk for the publisher in the classic publishing deal, which is like from the publisher's perspective. Like, we make our publishing deal, I give you money, you make the game, we distribute the game, we share profits. That's it. In a successful relationship, the developer will have a successful game. The game will build a big brand. It will make lots of money for everybody, but then they might go to another publisher for the next deal, or they might publish themselves. They learn a lot potentially from the publisher if it's a mutual relationship. And then the publisher has invested a lot in the developer, but doesn't really get anything out of it. So I think that's why even in the 90s, you could see the big guys like EA and Activision just eventually acquire all the good studios. And that's also something that's happening in mobile right now. Gamevil come to us hasn't signed a lot of publishing deals in the past, but we have acquired All M, which is a developer for PC and mobile in Korea that has been working with us for a long time. And we have been publishing their games, Critica and Air of Light, and we've now finally acquired them because we built a relationship and then, we sealed the deal. So I think now as a publisher, if you're serious about the developer, you want to have your foot in the door. Otherwise, somebody else just steals them from you, basically.
Interestingly, I think it also works the other way around from the studio perspective. I think what becomes more and more important as a development studio looking for being acquired at some point, that you really own your IP and that you have a share in the revenues that your products generate. And I think that maybe in mobile, it always has been more like this, but in other areas, it certainly not always was like that. So the value of the studios really depends on owning this IP and having the possibilities that you just described, right? Being able to switch to another publisher, but also when you are acquired, the acquirer also acquires this IP and the future potential of it.
Yeah. That's the only way it makes sense, because if the developer retains the IP and everything, then after 3, 4, 5 years, they go somewhere else and the publisher isn't happy anymore. So you both have to have skin in the game right from the start.
Yeah, I think you're right, David. I see this more and more. If you look at obviously what Huge have just done with Traffic Puzzle as an example, right? That's the way it should work. You establish a really good relationship working together. You have a great process. You're making a very profitable game, so then it's really natural. Then you work towards that conclusion of acquiring the studio and the content and continuing on that journey. So from a publishing perspective, in that scenario, it's all about mitigating risk. I think for me, the challenge is now is the reaction from some of the VCs. Some have gone up, so they're going kind of Series A and later now, whereas a few are now coming down to sort of like seed, pre-seed. So on the flip side now, I see this sometimes with studios in terms of they now see publishing as, look, it's a means to an end. A publisher can help me get my first title out, which will then in turn raise the valuation of my company and enable me to raise a bigger round, because ultimately they really want to self-publish and have everything in-house, and they just see publishers as a means to an end, and think they can get better valuations, or that path meets their strategy. So again, for me, it's just if you're a studio right now and you've got a great title and a vision, it's just really exciting for you. If you just focus and execute, you're going to have so many people that are courting you. So what's interesting about this panel is we've got two different perspectives. We've got people that are acquiring, and we've got people that have been acquired. So let's spend a bit of time talking about that process from different angles, because I think it's fascinating. So who wants to start about what it's like being acquired and what that process looked like versus what it's like being the acquisitor?
I can start. I know both sides a bit more, of course. So for Stillfront, it's usually the case that they will scout there's many companies and look for potential fits, and then will contact the studios. And that's how we got in contact with Stillfront. They approached us. They saw a potential strategic fit for what they were trying to achieve at that time. And Stillfront was very much in the beginning of what they did back then. So we started to talk a bit, exchange some numbers to get an idea if this fit could work. And I think after this first check, what do the current owners or the founders want? What are you looking for? Do you just want to sell to get earn out as quickly as possible, or do you want to be part of that bigger company that will acquire you? I think that is very important, an important step where you have to see, does the culture fit? And then the process can take quite long. Usually as a studio, you will look for other potential candidates who are interested in buying. And then in the end, it's who has the biggest strategic stakes into actually acquiring you, who can create the most value. So this can probably takes half a year or a year. At that point, we got also advisors involved, because of course it was the first company we sold, so we didn't want to make mistakes that you can avoid. And I would also recommend doing this, getting experienced M&A advisors on board early in the process. And then it's really working out the deal structure, working out the clauses. Then you go into a due diligence process, which can be painful when you so far hadn't been so structured. Maybe you didn't have to be so structured. And then of course, then there's the integration phase where you are becoming part of this new company. And I think that differs massively between different, who acquires you. There are very different philosophies of how integrated new studios should be. Should they continue to run their own marketing, or should there be central marketing, whatever, centralized services? So for Stillfront, it's a pretty lean process. You have to, of course, be able to update your financial reporting to report to a publicly traded company. That is maybe the biggest step, because it needs professionalization and new processes. But of course, that's also supported by the group. And then you have to hook up to some central monitoring and services. But everything else in Stillfront is really that you pull from other studios providing certain services in the group. And you can start creating the synergies, looking where do I have potential, where can someone help me with marketing, maybe, or we can share engines and so on. that is really then the step after the acquisition. And I wonder how other people see this, because maybe Rovio or other companies have quite different philosophies on how to onboard a company. Yeah, so that was in a nutshell the process as we saw it, and how it still is today lived by Stillfront, I would say. So first, cultural fit has to be there. You have to have an understanding, does this new team match our group philosophy, where you have a very distributed, no top-down management. So it really depends on people working together on eye level, and then you go into this, well, due diligence, and lots of lawyers get involved.
Fantastic. David, Timo?
Well,
Yeah, sure.
You go ahead.
Go ahead.
Okay. Your story is more exciting.
Oh yeah, I can give actually example of the when we acquired Dark Bar Games a year ago. So that's the studio in Copenhagen. So that was something we did during the pandemic, and that was pretty exciting. And I think for every M&A case, it depends a little bit, like case by case, what type of process you have, because it depends like how well you know, for example, the company, and how long the so-called dating period is. It is like how many times you need to go to the restaurant or play tennis or whatever that is to get to know each other a little bit better. What is the company, you know, what are the big dreams? How, for example, Rovio could help to achieve those dreams and things like that. But so a year ago we acquired a studio from Copenhagen, and of course, because of the pandemic, it was not possible to go to meet them in face to face. So we basically did the whole M&A process virtually with Zoom calls, Google Meet calls. So that was a little bit different way to do it. But basically, what it required like lots of time, of course, like lots of video calls to get to know each other. Like we want to start the process basically understanding like what does the company wants to achieve, and understanding that do we share the common vision for the future of the company. Like Rovio has a certain type of philosophy to make games. Like we believe, for example, in genre mastery. So that's something that we typically hope that the acquired studios also believe, and this was also the case in that case. So the studio was focusing on the RPG games and had a passion for that. And then, like during the process, we basically very quickly realized that, hey, this is something that both parties want to continue. So we went very quickly to the DD phase, and of course that's the painful one, especially if you don't have made the documents available. So I really strongly recommend you to document everything what you do, so that you know you have the company strategy, you have documents about the gaming, what's the about your organization, etc. And that can speed up the process a lot. And then we basically wanted to meet all the people, all the employees in the company. So the Dark Bar Games, they were really open up and transparent about the process, because typically you only have like maybe few guys knowing in the company that is in the process that said, hey, we actually consider selling the company. But in that case, the entire team, about 20-25 people, were they know what was happening there. And so we wanted to meet everyone, like have like a virtual calls with them, and kind of tell why Rovio could be the best family for them in the future. And then eventually both parties agree that, hey, this is the best for both companies. And then we made the joint plan there. But I think this is a kind of example that even though we are living in these weird times, it's still possible to make the deals. And as you can see, there's been lots of activity. It has not stopped that. But I think the people part is even more important, because especially if you think about the integrations, and that was something that, of course, how do we do that? Hopefully last summer it was possible to go to visit the studio, but then, you know, pretty quick, the situation got worse. So there was more infections. So again, everything just go to remotely again. But I think we really wanted to focus on like getting people involved. So you need to put like an extra effort there. So it basically means that you just need to spend more time with the people, like have a clear strategy, clear vision, what's going to happen there, and then integrating what makes sense, basically. So we also have a similar philosophy. So we don't force like, hey, you need to do that. It's more about like what makes sense. So if they have something that already works, of course, we don't want to go and say that, hey, you guys should stop. So we only want to kind of foster that further.
That's pretty much how we did it as well. Camptos acquired a German company last year. They called Out of the Park Developments GmbH. And I can talk a little bit about that because I'm now running Out of the Park. They're based near Hamburg, so representing on this panel as well. And it took us about a year to acquire that company. And we were fortunate to have like some personal meetings in the beginning, at least, but then also due to COVID, everything went over Zoom. And now the challenge really is integrating them and understanding the very different work process between a Korean company and a German/US company, because we have a lot of freelancers in the US working on Out of the Park. And it's also interesting to see that every company has their own like way of doing this integration. I would assume that Stillfront has a very structured process on how to do this because they acquire like 20 companies every month. It feels like for Camptos, it's a little different. We do a lot of investments, but not that many like full on acquisitions. Out of the Park was the first non-Korean company that Camptos actually bought. So there's a lot of talking and shaking your head and not understanding what's going on. But eventually, yeah, the key things are financial reporting. Just report to the big boss all your numbers, your goals, what are you doing to make the product better? And aside from that, I think a good acquirer leaves the company alone because you acquire them for a reason, because they're good at something that they do.
It's really interesting perspective. I particularly was just Tobias mentioned this word strategic, and I was just kind of wondering if if you could give some, having gone through this process from both sides, if you're a studio now, what kind of outside of M&A advisory, very good lawyers, very good accountants that can make up for all those pieces of paper that you should have got signed 3 years ago, but you didn't. In terms of trying to find that right strategic partner, what are the kind of questions that the studio should be asking to make sure there's a good fit on their side? What do you think is important?
That's a very good question. So you should be knowing what you are looking for. So I think many studios have a lot of potential if they had access to distribution and marketing that they don't have themselves. So if you're looking for that, then there are probably some companies that can offer that better than others. But besides that, I'm not sure. I think the company acquiring will have a good idea what they are looking for. Maybe it's pretty hard for you as a studio to know what you actually can deliver to a certain company. So I wouldn't have known 10 years, it was already 8 years ago. Okay, the goal was to have a company like ours that provides like growth and constant revenues that would allow an IPO. And that was really like the launch pad for Stillfront to then grow. We knew that because Stillfront was offering more than others. Most investors would just look at us and say, okay, so and so many million revenues per year, so and so many people, but you will leave and you're really important in this team of 15 people. When the 3 founders leave, then what is left? So I can only pay you like a 2x multiple on your revenues, and more would be not wise. But Stillfront obviously saw something else, and they saw that we are still here 10 years later, driving this company and growing with them. And they knew how to make value from us. Yeah. So.
Yeah, I think it, like you said, it is difficult because you're in 2 scenarios. You've actually even not thought of too far down the line. Maybe you're starting to think about maybe raising some funds, but you're just focused on executing the game. And then all of a sudden, someone's knocking on your door, and before you'll know it, you're 5 rounds of conversation and there's an offer on the table to buy your company. So I totally get it in that scenario. But yeah, I agree with you. It's actually what you just said is, you kind of need to have a good idea. Otherwise, the person acquiring you will just lead the conversations, and you need to, that's why I was asking in terms of, thoughts on, is it the same things apply that you mentioned Stillfront look for. As a studio, you should be looking for, great cultural fit. Is it particular tools or expertise that you need? Is it maybe a strategic play in terms of something in the group that could really like 3-4x your revenue, right?
Yeah, especially when you look to continue to run your company in the next years and you want to build it because it's your child, your company, then you should get a good understanding. Are they buying you for the right reasons? Are they buying you because you promise I will develop 2 new games and will grow like 5 times in the next 2 years? You probably have a business case showing that, but it's really the business relationship shouldn't depend on that, I would say.
We have 3 minutes left, so let's end on the sort of crystal ball moment. What do we think is going to happen Q3, Q4, H1 next year? Hopefully the world, maybe looks a bit different next year. Maybe players spend less time in games. Is this bubble, M&A bubble in gaming, going to burst or carry on? What do you think?
I think it's going to carry on because there's about 270 SPACs looking for investment right now, or like looking for a company to merge with, and they're going to get very desperate towards the end of the year because they have to turn around their SPAC in like 24 months. So it's still a good time to be a seller, and it's going to continue like that for this year for sure.
Yeah, I agree that like if gaming is mainstream, and last year was a huge growth, and it's still estimated to grow like double digit, and just in like a 3 years time there will be 200 million more payers, so not players, just payers. So the market is going to grow in the future, and there's always this constant demand finding the new big growth opportunities. So the competition will be fierce in that. But I think in short term there might be maybe some sort of heat for more like a casual side of gaming, because when all the restrictions are gone, maybe you have some time for something else. But I think all the like heavy gamers, they just continue to do what they love to do, so that's their main hobby. So I'm not worried about that.
Yeah, I agree. I think investors realize this is a good market to be in. I think we already saw some corrections in the valuations already when the first vaccine news came out last year. Maybe there will be some further drop, and I think we will see probably some more sober valuations of studios in terms of their future potential or so after last year. But who knows? As you say, there's a big demand, and it's good to be selling at the moment, I would say.
Great. Well, look, I think we're bang on time. I just want to thank you all for your insights and contribution. It's such a great topic to have on a panel outside of all of the sort of day-to-day implementational stuff. Julia, over to you.
Thank you very much, guys. That was very interesting and super hot topic. Well, always been, I would say. We have one question in the chat. Let me read it for you. So Stefania asks, who will lead the consolidation on the gaming market, in your opinion? Large game publishers, private equity funds, or anybody else? And in what region do you expect the largest transborder M&A activity in the gaming sector?
I think if you've seen the E3 press conferences, you've seen that Microsoft is really serious. So in some way, I would expect all the legacy guys to step up in a big way. And legacy is like a weird word for Microsoft, but we're here in this mobile gaming panel. So anyway, I think there's a lot more going to happen from that side. You see Sony getting on board with Discord. I think that's very, very interesting and will make a big difference in the next few months, in my opinion. And I'll leave some of this question for Timo and Tobias.
Yeah, I also agree that the big publishers continue to dominate this space, and I think the consolidation continues in all possible market areas. And I think it's still difficult for like some Western companies go to Asia. It's more easier for Asian companies to go to West, but I think the market is going to stay hot in all possible regions.
Okay. Sounds good.
I can just agree. I think it's not purely investment. I think that works to a certain degree, that you just acquire studios and then put them, build a portfolio. But in the end, you have to provide, like you have to add value to those studios you acquire, and that those will be the publishers already existing, like companies with actual game know-how in their gaming know-how in their DNA that will probably succeed.
Yeah, the only thing I'd add is again, it depends on how you look at it. You've got this sort of like one-stop platform for developers. So when you think about what Adam and the team are doing at AppLovin and the acquisitions they've been making, you look at Unity, that all of a sudden now have this sort of Trojan horse into the publishing and distribution side, as well as the ad network. You've got, Iron Source with their impending SPAC as well, and starting to make some acquisitions, and a few others are starting to look that way. I think that's quite an interesting trend, almost this like platform as a service for game studios. Whatever you need, distribution, analytics, ad network, mediation, creative, UA funding. I think that's definitely a space to watch.
If you think about it, the most successful companies in the world are vertical companies that do everything from the very beginning of the product to getting it into people's hands. Like Apple, they produce, manufacture, have their own stores, have their own app store. Almost no games company is vertical. And maybe Zynga is making moves in that direction. Maybe Steam, maybe Valve is vertical because they have their store. Maybe Epic is on the way to being that, but we still have some room to grow there.
Okay. Thank you very much for your opinions on that. Was a good answer. We are out of time. We will be happy to watch your discussion once again when we have the recording available. Thank you very much for today, and it was a pleasure to have you.
Thanks, everyone.
Thank you.